The initial reaction in financial markets to the first Biden-Trump debate was unequivocal, the US dollar pushing higher as investors judged former President Trump as the winner. Now, some analysts say his plans for higher import tariffs and rhetoric could morph into increased trade tensions or adding to US dollar safe haven stories. Now, while the Biden-Trump debate was thin on economic policy, there could be some clues to what's in store from the angry exchanges. And for that, let's speak to Stephen Innes. He's managing partner at SBI Asset Management. He's joining us live from Bangkok. And Mr. Innes, I'm sure you were glued to your TV as I was in the morning this morning. But if we take you back to 2016, Trump's surprise victory then shocked the markets. And that's in contrast, isn't it, to how the markets are reacting to his potential win after that first presidential debate. First, why the turnaround in sentiment? And would you go as far as to say markets are looking forward to a Trump return?
I think so. I think heading into the debate, the polls and betting market suggested Trump's odds of winning in November were strong. And I think the perception among market participants is that Trump's policies are going to be market friendly in the sense they're going to be pro-big business. There's also going to be tax cuts, well, at least an extension of the tax cuts. So this is going to be fairly positive. However, while it's impossible to really predict precisely what Trump's economic policies will be, how their exact impact on the market will be, I think what we have to look at is this trade war situation, which is effectively a tax on goods coming into the U.S. market. Not only is it going to hurt exporters in China, but it's also going to stoke the inflation fires again. This is probably something that Federal Reserve policymakers are certainly not looking forward to, because they've been fighting inflation for the past several years post-COVID.
Yeah, let's pick up on that point of inflation. Although details were scant, it was clear that the economy was a key feature in that debate. Both men were blaming each other for inflation, while yet taking the credit for creating all those jobs. In your mind, how would you weigh up the economic arguments that came out of the debate?
Well, they were thin. There wasn't really a lot of substance there, but I think if we look back at prior history, we're probably going to see the extension of the 27 tax cut and the Job Act that were set to expire at the end of 2025. We just discussed about those tariffs, and we know how those are going to negatively impact some Asia exporters, along with perhaps stoking the inflation fires. We're also going to see a rollback much of Biden's clean energy policies. How this will play through into the oil market will be quite interesting. While on the one hand, the tariffs will increase and possibly increase inflation pressure, lower oil prices perhaps could reduce inflation pressure. So there's a bit of a trade-off there. But what the market is quite worried about right now is the rhetoric that's firing around the central bank. First of all, we've heard rumblings that Trump wants to replace Chair Powell after the end of his term. And there's also talk that discussions around changing the Federal Reserve Act to reduce the Fed's independence. Now, this will be a real shock for the market. And this is something the market will have to absorb after the election.
Yeah. And in the event of a Trump White House, what do you see as the key areas that would be affected in terms of trade and finance? And, we can, to a certain extent, be informed by his past term, can we?
Yes, I think we have to look at, obviously, the oil sector is going to be an important part, because a lot of those sanctions that were placed on especially around green energy, that were placed on businesses are going to get rolled back. So first of all, businesses won't have to absorb those expenses. Then oil will probably be incentivized to produce more oil. So that's a positive in that light, in a sense, for the energy sector. However, we also have to look at the potential, getting back to this inflation effect again. And this is something that we have to really keep our eye on the ball here. And if inflation starts to stoke up again because of these policies that Trump is talking about, then we could be in for higher for longer interest rates. And that will eventually take a lot of the momentum out of the market that perhaps a red wave could instill in market sentiment as we move into November.
Yeah, another legacy of Trump's previous presidency was tax cuts. If he continues with these, there's talk about the impact on the U.S. budget deficit.
Yeah, I mean, fiscal policy, bond yields, inflation, all of it comes together through that channel. Once we talk about tax cuts are probably not the wisest thing to do when you're running such a huge fiscal debt. Who's going to be paying for this? I mean, you're just sort of passing this debt on to future generations. So it'll be interesting to see how the bond market reacts to these tax cuts. Sure, yeah. Stock markets might get a little bit of a bounce, but the bond markets, I mean, they're going to struggle because there's going to be a lot more debt, and who's going to be paying for the debt? And that's going to be an issue that bond traders will have to deal with, probably more so in 2025 as opposed to right off the bat at the end of 2024.
Hey, Mr. Innes, tell our viewers very quickly how you would advise investors to position their portfolios in the run-up to the presidential election. Early days still, though.
Yeah, I don't have anything wild to hit with, but I still like the stock market because I think we're going into an easing cycle by the Federal Reserve, and I think this will be a policy supported by the Trump administration. I also kind of like gold here because we're going to have a lot of political uncertainty, especially around geopolitical risk. So these are two areas I would probably continue to admire in the markets going forward.
Thank you very much, Mr. Stephen Innes there. He's the managing partner at SBI Asset Management.